Alrighty, what's up guys? This is Taylor. Today is Monday the 16th of January, and the market, of course, is closed for MLK Day. So, tomorrow, my friends, we get back to playing the best game on earth. But we'll jump in here. We got a good one lined up today. Before I jump in, guys, I got a book suggestion for you. So my man Mirza from Simpler Trading, he actually suggested this in the Mastery chat the other day. I'm a couple of hours into the audiobook. Really good stuff. So the book is called Best Loser Wins, which is a fire title. Best Loser Wins by Tom H. We'll call him Tommy H because I don't want to butcher his last name. But if you got Audible, you can download it on there, or you can buy the book if you're a bit more old-fashioned and you like that feel of that paper in your hand. But a good book, guys. A lot of the classic trading books are, they're a little bit older and they're all kind of focused on like the actual physical act of trading. This book is a little bit more recent and a little bit more focused on the emotional side of things, which, as you come to learn, is like 95% of the battle. So check that out. But otherwise, we shall jump in, and on the agenda today, we'll do a quick update on the indicator. We will take our top-down look at the market, and that will lead us into our focus list setups for the week ahead. We got names like NVDA, Google, Apple, Home Depot, Honeywell, and a couple of more bad boys. So without further ado, we will jump into the weekly Watchlist video for the week of January 17th. Alright, so first things first, indicator update. Listen guys, I'm here to please. Alright, we aim to please. So we pushed the update last week. And keep in mind, the update really changes the indicator as far as the ingredients. Alright, we changed out a couple of momentum ingredients, we added rather a couple of moving average crosses, really tightened up the quality of the signals, and really tightened up the speed of the indicator. Alright, we're going to get our signals a little bit earlier, and we're going to lose our signals a little bit earlier as well, which for my style of trading is perfect, because now we're going to get long or short before the big move unfolds, and we're going to take our profits or get the hell out of there before things begin to reverse against us. So I'm pretty happy with the update. But as far as the visuals, with the update originally, we got rid of the arrows and we went with the colored bars. So based on the feedback, a lot of you do like the arrows. So the goal is, at some point this week, we'll push another update, and now y'all will have the ability to do either the arrows or the colored bars. So you can do one or the other, you can do both. You can get as freaky as you would like. As you can see right now, I have both. So a red bar or a red arrow, of course, is our sell signal. No arrows or a gray bar, that's neutral, right? Not bullish nor bearish. And the green bar or the green arrow, that is the buy signal. So a pretty big change as far as the the ingredients goes, but visually, you can do your bars, you can do your arrows, you can do both. We've got you covered. So for those of you with the indicator, you'll probably get an email when that next update is live. And we will also, with the update, get our multi-time frame labels back up and running. I, for one, really miss the multi-time frame labels. So we'll get that handled. We'll shoot you an email. And for those of you interested in checking out the indicator, link in the description. But with that out of the way, let's jump into the juicy stuff here, shall we? Okay, guys. So we're going to do our top-down look at the market now. Man, it is snowing like a son of a bitch outside. We got some snow coming down, but we're going to do our top-down view of the market here. And I'll shoot straight, guys. For now, I think the bulls have got a pretty good chance at trying to take the market higher. And that's just based on the signals in front of me right now. So one of my goals this year, with the update and the improvements to the indicator, the best way I can word it, I don't want to be bullish, I don't want to be bearish, I want to be available. For those of you that have read Trading in the Zone by Mark Douglas, he talks about being available, right? Being available to take what the market has to offer. So for me, that means I'm just going to focus on the pretty colors. Leave the opinions, leave the biases, and leave the thoughts of where I think the market's going to go in a month or two. Kind of leave them at the door, and more so just wake up every day objective with an open mind, looking to play the signals and the pretty colors right in front of me. So as far as the pretty colors here, guys, the bulls have made some pretty notable progress here over the last week. So we're going to start off on our weekly chart, and this is where I'm seeing the biggest shift. So a quick look here at the indicator, and we've had these weekly sell signals pretty much for the whole duration of last year. You got a few fresh, you got your early weekly sell signals back there in February. The bulls did fight a little bit, took the sell signal back to neutral, but then, call it April, we got another weekly sell signal, and ever since we've been playing out this pattern of a weekly downtrend. Big flush, lower low, bear market rally, a lower high, another big flush, a lower low, bear market rally for a lower high, and that's pretty much the pattern that should play out until we can finally cancel out that weekly sell signal. So last week, that is exactly what the bulls did. Indicator goes from bearish to neutral, right? Red to gray, no more arrow. We get a really good close back above the weekly 21, and the squeeze histogram goes positive. So in plain English, guys, this is progress from the standpoint of, it's not as if, oh my god, that weekly chart is bullish. The progress is a little bit more, the bears are kind of running out of gas. Momentum is not crazy bullish, structure is nowhere near bullish, but the indicator going from bearish to neutral tells me for the first time pretty much since this downtrend started, the bears might be running out of gas. And without that sell signal intact, the probabilities really start to decrease of a huge flush back down towards the lows. Now, it doesn't guarantee we're going to trade higher, but that's a concept you should keep in mind heading into this week. We're not in a bull market all of a sudden, but the bears might be running out of gas. So there's some positive divergences, so to say, happening in the favor of the bulls. So that's a big shift in the weekly chart. We haven't seen that weekly sell signal get canceled since March or April of last year. So to me, that's pretty big in terms of a potential shift in context. The context of all these previous rallies, the rally back here in April, May, the rally from June, July, August, the September rally, they were all done under the context of a weekly sell signal. Right? And what that weekly sell signal tells us is that trend, structure, and momentum still works in the favor of the bears. So if trend, structure, and momentum all works in the favor of the bears, these rallies are going to be short-lived. Now that we finally get rid of the sell signal, again, doesn't mean we're bullish. It just means trend, structure, momentum isn't completely working in the favor of the bears. Now the bulls potentially got a fighting chance to actually take this market higher and maybe start to work on a true reversal. Right? Bear market rally, bear market rally, bear market rally. Indicator goes from bearish to neutral. We can potentially start to work on a reversal. So we got to take it week by week here, but that is some pretty big progress. Pretty big shift in momentum in the favor of the bullskis. All right, moving on to our daily chart here in the middle. And a pretty good week there for the daily chart. The indicator goes bearish to neutral. Squeeze histogram goes positive. We're back above the 21. We're back above the 50. And we actually got to close on Friday back above that 200 SMA. So we are a little bit overbought here. But the key moving forward is, can the bulls keep the progress? We should expect some dips. Frankly, I would like a dip. Makes it a little bit easier to get long. But that's the key. Can they keep the progress? Weekly chart goes bearish to neutral, back above that 21. Daily chart goes bearish to neutral, back above all the moving averages. It's okay if we dip here, but it's not okay if we dip and we give back all that progress. Now, our lower time frames here, they're starting to look all kinds of pretty. All kinds of pretty with that buy signal. The hourly chart is bullish. The 15-minute is bullish, the 5-minute is bullish, and the 3-minute is bullish as well. So, rock solid stuff here, guys. Here's a good example, though. Right, they've made progress. Can they keep the progress? How does the market handle the dip? We got our first big push. Right, squeezing out all the shorts, spanking all the shorts. Then we got our first dip. Look how well the market handled that dip. S&P's pulled back to an hourly 21. The indicator goes bullish, and we get continuation higher. Right, so that concept of an uptrend, really, really important right now on your lower time frames. We ain't in a weekly uptrend, right? We're not in a daily uptrend. If from here we're going to trade higher, lower time frames have to hold the dips. Right? You want to see your lower time frames behaving like an uptrend, which by definition is basically just higher highs, higher lows. Higher highs, higher lows. So it's all pretty solid here, guys, right? One more time, taking it top to bottom. The weekly chart, a lot of improvement last week. Big, strong close, back above that 21. Squeeze histogram goes bullish. Indicator, bearish to neutral. Bearish to neutral pretty much for the first time since the trend started. Daily chart goes bearish to neutral. Rebuilds a little bit of structure back above some key moving averages, and from an hourly chart to a 30-minute chart to a 15 to a 5 to a 3-minute, all our lower time frames looking all kinds of bullish here. So that's the progress that was made, and if they can keep this progress, I think our next target here in the short term is about 40.50. Right, 40.50 would get the S&Ps back to the weekly 50 SMA. And the weekly 50 SMA has been a bit of a bully here to the market over the last year. Right, that's kind of been our ultimate line in the sand, called it, where we rally to a weekly 50, fall apart, rally to a weekly 50, fall apart, rally to a weekly 50, fall apart. Well, maybe this time around it's different. Bearish to neutral, bullish on the hourly, bullish on the 30. Things are kind of shaping up here to give the bulls their best chance of actually getting the market above the weekly 50 if we can get there. And I think the best way we can get there is by keeping all that progress when we get these dips. If on a good dip next week, the S&Ps are back under 3,900, then I think that's all she wrote for the bulls. But if they can handle the dip, and our lower time frames continue to behave like an uptrend, I think in the short term here, that's our next target. A push for the S&Ps back towards that weekly 50 around 40.50, and when and if we get there, then we shall see what's up. But that is a progress the bulls have made. We'll see if they can keep it. A couple more charts here, guys. QQQ. Now, of course, the Qs are lagging behind. But I do think potentially the Qs could be shaping up here for a push back towards 295, which would line up with your daily 200 SMA. Now, to get back to 295, here's what I think they got to do. Looking over here on the far left at our weekly chart, unlike the S&Ps, the weekly chart didn't make too much progress last week. We're still under the 21 EMA. We're still printing the sell signal. But if this coming, this coming week, if we can crank out a weekly close back above that 285-ish weekly 21 EMA, then I think the door is open for a push back towards 295. All right, so play the over-under game. Over or above the weekly 21. There's probably a path here for a push back towards 295. If they can't get it back above the weekly 21, continue to be a little bit cautious here, trying to play tech in a bullish fashion. Weekly chart, not the prettiest. And don't get me wrong, it's not as if the S&Ps have a beautiful weekly chart. Right, not sure I would try to take the S&P's weekly chart to prom, but it's a heck of a lot better looking than the QQQ. So if the Qs can get through the weekly 21, then I think we're trying to play this long for a push back towards 295-ish. All right, now our daily chart last week does make some decent progress. Indicator goes bearish to neutral. All right, so we're not bullish here, but the bears have kind of ran out of gas. We're back above the 21, we're back above the 50, and we'll do a quick check here of the lower time frames. Our hourly chart. Come on, keyboard. Let's see, the hourly chart is bullish. And the hourly chart does a great job here of handling these dips. Big initial push, spank in the shorts, pull back to an hourly 21, perfect hold, and you keep on pushing. Higher highs, higher lows. Higher highs, higher lows. So the hourly chart is bullish, the 15 is bullish, the 5-minute is bullish, and the 3-minute is bullish. So bullish lower time frames, back above your key daily moving averages. Last piece of the puzzle here, getting a weekly close back above that weekly 21 EMA. If they can do that, I think we got a push here lining up for the daily 200 around 295. So there's the QQQ. Quick peek here at IWM. IWM pretty solid. Weekly chart is neutral, back above the weekly 50, which is actually pretty impressive. So for the first time since For the first time in a year. So for the first time since that downtrend started, the IWM here, the little fellas, cranking out a weekly close back above the weekly 50. Right? Big step in the right direction. The daily chart goes bearish to neutral. Huge push here through the 200. The hourly is bullish. The 5 is bullish. The 3 is bullish. So the same rules apply. A lot of progress was made. And if they can keep the progress when the market dips, you look for the IWM to continue trading higher. And last but not least, probably the best looking of the bunch, the Dow. The big Dowski. Now the Dow here actually looks really good in a weekly chart. So the Dow was the first of the indexes to actually go from bearish to neutral on the big 3 indicator here. So bearish to neutral. Big push to the upside. Pulls back towards that weekly 21. Finds perfect support. And now we're turning the corner. So on your weekly chart, here's something potentially trying to shift the trend. Instead of a bear market rally, now that the indicator has gone from bearish to neutral, the Dow here could be trying to work at shifting the pattern to start to play out higher highs and higher lows. Which would suggest from here, we take out 345 and trade towards 350. Pull back, put in a higher low, and keep the party going. So that shift on your weekly charts, right, the indicator going from bearish to neutral, really big stuff. So we want to be mindful of that. We got a daily squeeze here looking solid. The hourly is bullish. The 5 is bullish. The 3 is bullish. So you got a pretty good looking Dow Jones there. So there you have it, guys. That is that's our top-down view of the market for now. Right? Context, as always, we are not in a weekly uptrend. We're not in a daily uptrend. Right? We're nowhere near a quote-unquote bullish market. But the bulls are making progress. Right? They're making progress on lower time frames with some fresh buy signals. They're making progress on larger time frames with some, call it positive divergences in the favor of the bulls. Progress was made. Can they keep the progress? If they do, I think for a few weeks here, we might have a green light to trade this market to the upside. But you want to you want to take notes of all this progress. Right? What have the S&Ps done? What have the Qs done? What has the market done here over the last week or so to have me wanting to trade it in the bullish fashion? Write all those things down on paper. And as soon as those things start to disappear, you should probably pump the brakes on looking to play the market to the upside. Good progress, but it's only good for trading the market higher if they can keep it. So with all that out of the way, guys, we'll jump into the watch list here, and we'll take a look at NVIDIA, Google, Apple, Home Depot, and Honeywell. All right, let's get it going. Alrighty, first up is NVIDIA. So for those of you in my mastery, we got long NVIDIA on Wednesday of last week. So our trade here is off to a pretty good start. But what I want to do here, guys, for the focus list names is just kind of rifle through them. So for NVIDIA, weekly chart, bearish to neutral, positive histogram, nice close back above that weekly 21, and the target here to the upside is a weekly 50 around 180-ish. So we got a neutral weekly chart back above the moving average. Our daily chart had a heck of a week last week. Indicator goes bearish to neutral, back above the 21, back above the 50, back above the 200. That's a pretty strong action there from our daily, and our lower time frames all going bullish. Buy signals on the 1 hour, buy signals on the 15, buy signals on the 5, buy signals on the 3. All kinds of pretty colors there on your lower time frames. So pretty straightforward stuff here, guys. Progress was made. If they can keep the progress, we should have a path here for a push towards a weekly 50 around, we'll call it 180-ish. Under 155, right, back under your daily 21 EMA, then I think that's all she wrote as far as trying to see this into higher prices. So the game plan this week, if you're looking for a trade, or even if you're in a position like I do where you already have a trade here in NVIDIA, if we can get a dip, and as long as that dip does not go under that daily 21 EMA, this should be a pretty good buying opportunity here. Right? Keep it above that daily 21. Keep the 1 hour, keep the 30-minute charts printing that buy signal. That's where you take your entry, trying to get positioned for a pushback towards that 180-ish. So long NVIDIA above 155. Now next up here, guys, is Google, or as I like to call Google, the top G. So here's the thing with Google. Weekly chart is still pretty ugly. Now that could work to our benefit. What I would look for here is just nothing more than a bear market bounce in your weekly chart. A move back to your weekly 21 around 97 bucks. So that's the upside target. I don't want to be long Google on a close back under that daily 21 EMA. So we're working a pretty good risk versus reward here. Looking to get long above that daily 21. We'll can the trade on a close back under the 21, and we're looking for a push here all the way up towards 97, 98. So what has me thinking we could actually get a push towards 97, 98? It's all the lower time frames. Right, this is kind of like my reversals trade. Oversold on the weekly chart. The daily chart goes bearish to neutral and closes back above the 21. And then our lower time frames go bullish. Hourly chart prints a buy signal. The 30-minute chart prints a buy signal. The 15-minute chart goes bullish. The 5 is bullish. The 3-minute is bullish. So here's what we're working with here. While we're oversold on the weekly chart, and remember, when we're oversold on the weekly chart, that weekly 21 EMA is like a big magnet. Right? It's always calling for price to come back home. So while we're oversold on the weekly chart, if we can close back above that daily 21 EMA, and then our lower time frames print us a buy signal, that all kind of suggests this might be the moment in time where Google here is gearing up for a push back towards that weekly 21 EMA. And what I'm advocating here is that we can work a pretty good risk versus reward trying to express that idea. Long above the 21 EMA, looking for a push towards 97, 98, exit on a close under that daily 21. Pretty simple stuff. Next up, guys, is Apple. And for Apple here, it's kind of the same idea. We're back above that key level of 130. We're still oversold on the weekly chart. The daily chart is still bearish, so I would like to see that daily chart go from bearish to neutral, but our lower time frames are starting to shape up. We got a fresh buy signal on the hourly. 15 is bullish, the 5-minute is bullish, and the 3-minute is bullish as well. So if they can keep Apple above 130, ideally if they can keep it above that daily 21 EMA, we're trying to see if these lower time frame buy signals can't push this back up towards that daily 50 around 140. All right, so that over-under game, over the daily 21, we want to be long looking for a push towards 140, back under that daily 21 EMA. You cut the trade loose and you move on to greener pastures. So NVIDIA, Google, Apple, and next up here, guys, is going to be Home Depot, which of course is a Dow component, and we saw the Dow looking pretty good over there. So Home Depot, we've got a neutral weekly chart. Right above the good old 21 EMA, we have a neutral daily squeeze. The hourly chart is bullish, 5-minute bullish, 3-minute bullish. So you guys can kind of see a theme here. We're looking to buy the dips in names that are above their daily 21 EMA, printing buy signals on the lower time frames. So for Home Depot here, think you try to buy a dip, think you put your exit under the daily 21 EMA, and I think you're looking for a push back towards 345, 350, right back up towards those previous highs. Right? And those lower time frame buy signals, you're looking for those to lead the way. So we got NVIDIA, Google, Apple, Home Depot, and the last one here of the day is going to be Honeybun, H-O-N. So for Honeywell here, bullish on the weekly chart. The daily chart goes from bearish to neutral. We're back above the 21, we're back above the 50, and now inside this daily squeeze, our lower time frames go bullish. Buy signals on the hourly, buy signals on the 15, buy signals on the 5, the 3-minute. So the thinking here is that 3-minute, that 5-minute, the 15, the 30-minute, the hourly, all that bullish trend structure momentum under the surface should trigger that daily squeeze to fire to the upside. So pretty simple stuff here as well. Looking to get long above that daily 21, exit under the daily 21, looking for a push back towards the previous highs around 220-ish. So there you have it, guys. And as you can see, the theme is pretty much the same across the board. Right? Not to be overly repetitive in today's video, but progress was made. Right? Fight for a good entry, wait for a dip, but the key on that dip is whether or not they keep the progress. Right? Honeywell, here's a good example. Big push on the hourly. From bearish to neutral to bullish, you get a pretty good dip here, but they handle that dip perfectly. Right? There's the entry. They made some progress, they kept the progress, but they gave you a better entry. That's all I'm going to focus on this coming week. In the S&Ps, in the QQQs, the Googles, the AMDs, the NVIDIAs, you name it. Can the bulls keep that progress, and can it keep this party going to the upside? So my job is pretty simple. Show up, be open-minded, be available, and put the faith here into the pretty colors. But that is it for today, guys. Hope you're having a good long weekend. As always, hope you found today's video helpful. If you haven't already, do me a favor and hit the subscribe button. Leave me a comment down below, and until Wednesday morning's pre-market prep, stay safe, be good, and I will talk to you soon. Adios, guys.